What's going on, growth chasers? It's the Dividend Bloodhound here, back with another investing episode. Today's episode we're talking about the shorting of Tattooed Chef and why I think it is completely mad to take up such a position at the moment. If that sounds like something you're interested in, then do please smash that like button, stick around after the intro and consider subscribing and ticking that notification bell to my channel as well. I'll see you on the flip side of the intro. Catch you there. Hey all, welcome to the video. So as I mentioned, today we're going to be talking about Tattooed Chef, and as I released my last Tattooed Chef stock video, Roth Capital went public with its price target of Tattooed Chef, currently getting in there at $26, and I think this is a fair, well-rounded an analyst's point of view of where the company is at right now, and not a bad price target at all. And if you look at the company itself and you look at the analyst that actually valued the company, you can see that his performance over the last couple of years or so has actually been really good. However, the day after that, Kramer and Kerrisdale Capital announced that they were taking a short position in Tattooed Chef, sparking a pretty large sell-off in the Tattooed Chef's share price. Now, Kerrisdale went pretty big with the publication of this short report, and I saw it myself on Seeking Alpha, but it was publicised down a lot of other investing channels across investing social media, and even down the Tattooed Chef shareholder page on Facebook. And it actually sparked quite a big sell-off, and many people that hadn't done as much due diligence as maybe they should have quickly sold the stock based on Kerrisdale's report. However, when you look into their last year's performance, their position is not as good, and their analysis performance is also not as good as well. Kerrisdale cited a few things in its report for its short position. It cited a fanciful valuation, not sure why they came to that conclusion, and also the fact that the margin on Tattooed Chef products isn't as high at the moment, and also that revenue comes from Sam's Club predominantly at the moment by about 70% to 30%, and they cited this as too much custom in one place. However, what they didn't cite and what they actually missed out on is that Sam's Club is actually owned by Walmart, and then in the same report they actually declared that there would be some sort of misconception between Sam's Club and Walmart about selling each other's products. At the end of the day, Walmart is a parent company to Sam's Club, so is there really going to be any trouble there? I really don't think so at all. Now, this report actually torpedoed the Tattooed Chef share price, and it still hasn't really recovered from it, languishing at around $16 when it was up at the $17.50 to $18 mark. I know that doesn't seem like a big difference, but at these prices that is a 5 or 6% drop. Me personally, I used it as a buy opportunity because I've done my due diligence on this company, and I could see this report for exactly what it was: a torpedo, a hit and run attack to try and devalue the company, whether that was to buy their own shares. They obviously make money for shorting their position, but also giving the opportunity for other institutions to buy in at a lower price. I use this opportunity to bring my average price down. Kerrisdale cited that Tattooed Chef's revenue and sales growth had stagnated or slowed. Again, if you look at Tattooed Chef's actual numbers for how they have been doing over the last 3 quarters or so, it has been growing both revenue and profit each time. They also cited that branding was particularly poor, and I don't think that to be the case. You can see that the brand is developing over time, and that is without spending any money on marketing. Just because Tattooed Chef doesn't have a huge marketing budget at the moment, though I'm led to believe that that is coming in 2021, that doesn't mean that the brand isn't recognised for what it is, producing high quality products. They also went down the route of saying that Tattooed Chef doesn't have many products on the market, and I just don't believe that to be true either. If you look online on the website, you can see plenty of products. Walmart and Target are also selling plenty of products, over 10 of its actual range in store at the moment, and that number is growing all the time across the country. When I look into this report and I read it, I just can't see anything other. It just seems baseless, and Tattooed Chef went on record for that as well. The report, obviously, with such a supposed trusted capital company institution backing it, rightly or wrongly in some people's opinions, spooked a lot of tattooed chef investors who weren't as confident in perhaps their research or confident in the share price, and that sparked a sell-off that only recently completed in the last 24 hours or so. But when you actually look into the report and read it, have a look at Tattooed Chef's own numbers and financial reports, and then have a look at what other analysts are starting to say and how other investing commentators are speaking about the stock. You really see that the Kerrisdale report is really swimming against the tide, to be fair, and it doesn't actually stack up that well over the long term, which really does lead you to think that this is just a simple hit job, and that was exactly what they used it to do. The report rightly pointed out the weakness that is Sam's Club at the moment. You could call it a weakness, maybe you couldn't, because there is a lot of sales generated from that. But what you want to do is move away from where the product concentration is there. And according to Tattooed Chef's own figures, that is the plan, is to move away from that sort of thing. Currently it sits at about 60-40 balance between Sam's Club and Tattooed Chef. But over the future coming quarters and the future years, that is scheduled to fall to about 52% to 32% when Tattooed Chef's products actually end up in Walmart's, Costco's and Whole Food distribution will help that as well. So this will bring down that perceived weakness over time, and that is something that is going to have to stick with all of us, is just to be patient with this company and be patient with this stock. I personally believe that momentum is with Tattooed Chef and is starting to build in the company as more analysts come online at the end of the year and more analyst coverage takes place, and then more quarterly results are added to that over the coming 6 months or so. This is a really big time for Tattooed Chef. I'm holding on to this company for the long term, at least until 2022, and then I might take a reassessment at that point based on what the share price might be. And this is something that you should be considering too, unless you're trying to bag a short-term gain where you're trying to gain about $5 or $6 against each share. If you hold for the long term, the potential return could be massive. Wallet Invest has the 5-year long-term share price growth to be up to or surpassing $93 a share, and based on where that is now, that's a 484% return on current share prices, and that is, I believe, quite conservative. The price could easily go higher than that, especially with the sort of hype that Beyond Meat has had in the past. We all know that share price should be based upon fundamentals, but a lot of the times these days that just simply isn't the case, and that is why you could be even more bullish on Tattooed Chef share price, because it just has that ability to be banded up in the same sort of region as Beyond Meat and end up with a far surpassing a 3-figure share price, even up to $200 at one stage, which would obviously return a huge amount to your portfolio. To take you back to a previous point that was made, is that branding Tattooed Chef has is actually quite strong, but that is right, a lot of people don't quite know about this company yet, but that is something that will spread with the word of mouth, but it takes time to do that. Marketing campaigns will certainly help, but it just takes time for a company to establish itself. You know, for example, McDonald's didn't build the Golden Arches brand overnight. It takes time and it takes patience and it takes reinvestment of income that the company is going to make to build that brand over time, and that is something again investors are just going to have to wait for. If you do your due diligence and you wait for the long term, you really won't regret it with this company. Of that I'm fairly certain. It does seem repetitive that refuting this Kerrisdale report's claims is going on right now, but another claim that they made is that the margin that Tattooed Chef was making just simply isn't good enough. But then again, over the last 3 quarters their margin has decreased massively from 27% to 10.8% to 9%, so that is actually bringing it right down to single figures from 27% over the last year. So when they get a chance to become even more efficient, they're obviously going to make a lot more money. As aforementioned, I use this opportunity with the hit job from Kerrisdale to really build a considerable position in Tattooed Chef. My average share price now is $16.50 or below, which I'm very happy with, and it's one of my largest positions in my growth portfolio. I used the opportunity, and it turns out so did many financial institutions as well. I'm just going to name a few off that have had to declare how much they've bought, obviously due to SEC filings. So you can see that Falcon Edge Capital boosted its position by 21%. Sequenta International bought and boosted its position by 575%. And then the big one on there to take notice of is that Goldman Sachs boosted its position by 260% as well, purely based on just how low the share price came because it got a kick in, all because of this Kerrisdale report. As a full disclaimer, I am a heavy investor in this company, and it is one of the biggest positions in my portfolio, as I've already said, and I'm very bullish on the company. But that is down to my own due diligence and my own research, which means I'm very confident in the company. And you could be too, based on that research, but you should definitely also do your own research and also take into consideration just what Kerrisdale has said, but take it with a great big pinch of salt, because they've got their own objectives in mind. And then you should also look at what other investors are doing in the field and what analysts over the next few months are going to say. I'm a long-term holder of Tattooed Chef. I plan to hold it for the next 2 years or so and see just how much share price growth I can get out of it, hopefully turning into the multiple hundreds, if not over 1,000% maybe. Maybe that's wishful thinking, I don't know, but I'm certainly expecting hundreds of % return over that time period. Hopefully you've enjoyed this video today, guys. I really hope that I've brought you some value. If you can see your way to smashing that like button, that'd be absolutely fantastic. And if you could subscribe to my channel as well, that would also be awesome. Hopefully I'll see you in the next investing episode. See you there.